Hello everyone and welcome to Moementum channel. My name is Mo, and in this video we're going to be taking a look at 4 high quality exchange traded funds offered through Vanguard Canada that are perfect for investors looking for passive ways to invest in the stock market. What's so unique about these 4 picks is the fact that they have all very low management expense ratio. In fact, their management expense ratio hovers anywhere between 0.05% to the higher amount of 0.09%, which in grand scheme of things are all considered to be very low. They are all passive options to get exposure to the stock market, 100% exposure to equity market, and gaining that combination of dividend and growth from these options. The first one on the first column that you notice is Vanguard FTSE Canada All Cap ETF. It's available with ticker symbol VCN. The second one is Vanguard FTSE Canada ETF with ticker symbol VCE. Third one, Vanguard S&P 500 ETF with ticker symbol VFV. And lastly, Vanguard S&P 500 ETF hedged for Canadian dollars, very similar to VFV, but this one is available with ticker symbol VSP. Not surprisingly, VCN and VCE gives you exposure to Canadian equity, as the name suggests, and the other two gives you exposure to US equity. The fees I talked about, the management expense ratio, MER, is as low as 0.05% for VCN, which has the lowest fee, compared to the highest, which is for VFE and VSP at only 0.09%. It's still quite low fee if you compare that to the likes of mutual funds, which is around anywhere from 2% and sometimes even higher than that. In terms of the net assets that these funds have, the highest belongs to VFV at $7.2 billion, and the lowest is with VCE at $1.4 billion. The inception dates for all of these funds hovers anywhere between that 10 to 11 to 12 years. The one that has been incepted the earliest is indeed VCE at November 30th of 2011. And the one that has been incepted the latest is VCN, which was incepted back in August 2nd of 2013. They all do pay some dividend distributions, with the 12 months yield showing to be around that 3% for VCN and VCE, and for VFV and VCE, it's lower at around that 1.3%. Keep in mind that the S&P 500 funds, these two that we are reviewing, they are more geared towards growth, whereas the one that you do see from the Canadian equities, they're kind of focused on growth and dividend, hence you're getting a little bit more higher dividends there. In terms of the annual returns, though, that's where the difference starts to show itself. For example, for VFE, it's showing the best annual return when it comes to the past 10 years at 15%. Its 5 years annual return is at 11%, and its 3-year annual return is 12%. Compare that to now VCN with a 3 years annual return of 11% and 5 years annual return of 9%. Because it was incepted mid-2013, it doesn't have yet the annualized 10 years. Following that, we have VCE at 11% annualized over the past 3 years and 10% annualized over the past 5 years. Its annual return over the past 10 years is at only 8%. And lastly, if you look at that of VSP, the 3 years annual return of 10%, 5-year annual return of 8%, and 10 years annual return of 11%. Looking at the asset allocation, pretty much all of these funds gives you 100% exposure to stocks. If you look at some equity characteristics, such as the price to earnings ratio, the multiple for VCN and VCE is at only around 12.4, 12.5 multiple, whereas for that of the S&P 500 through the VFE and the fund that we have from VSP is higher multiple at 20.3 or 20.4, suggesting that these funds are priced higher in terms of the valuation and discount. Looking at the top holdings for the S&P 500, the funds, namely VFE and VSP, these are the common holdings, including companies like Apple, Google, Amazon, Tesla's, and you name it. Whereas the ones for VCN and VCE, we are looking at Royal Bank of Canada, Toronto Dominion Bank, Enbridge, Canadian Pacific Railway, Canadian National Railway, and other names that you see here in terms of the top 10 holdings. Looking at the sector breakdown for the Canadian funds, VCN and VCE, the highest exposure is to financial services, Following that, your next big exposure is to that you see that here is to energy at about 17% for VCN and around 18% for the VCE. And following that, we have industrials. That's the next big exposure that you see here. Whereas for the S&P 500 funds, your biggest exposure is to technology. Following that, you have healthcare and then financial services. Looking at the funds and ticker symbols, as I indicated to you, and these are all perfect opportunities and options for investors who are looking for investing in high quality exchange traded funds to get exposure 100% pretty much to stocks here in Canada. Well, I hope you enjoyed this video and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel here on Moementum Finance. We post every week videos about investing, including investing in the stock market, dividend stocks, growth stocks, and penny stocks. We also talk about ways to reach financial freedom. Thank you, and I hope to see you all next time.